All right. Discipline in trading is the ability to stick to a well-defined plan, manage your emotions, and follow your risk, even under pressure. So even if you're performing extremely well, you're in your bag, you're making bread, it's really important to always stay humble, okay? Know what we're doing and stay focused on the system, okay? If you're a break and retest trader, you stick to that. If you're a breakout trader, you stick to that. Whatever you were doing to get you to that bag, you can't change it up. You shouldn't switch it up, and understand that consistency is going to be the most important aspect of where we're trying to succeed at. So consistency is going to come from treating trading as a business and not a gambling casino, okay? So when we're treated as a business, we're understanding that the goal of a business is trying to use our money to make some more money, okay? So you're going to be putting your profit away, breaking your profit down, and understanding like, okay, I'm not just going to go ahead and withdraw and go blow all my profits. Let me withdraw a percentage of my profits, keep some in my account after wins, and let me go ahead and invest into certain things like long-term plays, like crypto, shares plays, okay? Invest your money into making more money. Being structured and disciplined is going to take a lot of pressure off of you over time, okay? The more disciplined you are today, the easier time you're going to have in the future, inshallah. So create a rule-based system. So whatever you like to trade, whether it's break and retest, breakouts, know what criteria you're looking for. Break and retest, for example, okay? You're going to be waiting for an area of resistance to be broken and then turn it to support, okay? Or if you're going to be waiting for support to be broken and turn it to resistance. Or if you're a breakout trader, make sure you stick to your 4-hour close rule, okay? Depending on what type of trader you are, follow your system. And your emotional control is also going to be a big factor in real life and the charts too. Avoid impulsive decisions driven by fear or greed or just any type of idiocy. Okay, we're all humans. Sometimes we all make mistakes. There's plenty of times I would make impulsive trades, okay, causing myself to just lose. But then I realized, I'm like, you know what? This isn't going to benefit my future. This isn't going to feed my family. This isn't growing my account. I can't be making mistakes like this, okay? And over the years, things got a lot cleaner and was able to just finish off the years profitable. Alhamdulillah. So risk management, okay? Stick between 1 to 10% of your account per trade. This way you're not going to be able to blow up your account in just a couple of trades, which can be detrimental. Okay, there's times I put in a whole check and destroyed it in one trading session, okay? And I don't want you to go through that. And this is why you need to have your trading plan in place, because no one can stop you from clicking buy and sell, okay? You're in full control of absolutely everything when you sign up to be a trader, okay? So it's a great thing, but it can also be a bad thing too if you lose yourself. So stay focused, okay? This is why God is really going to be important too, okay? Keeps us humble, keeps us disciplined, keeps us focused. Okay, so if a disciplined trader runs up a bag and they stop hitting certain trades that they want, okay, they might get emotional. They might be like, what? I was just winning for a whole month. I was just hitting every single trade. How am I losing? Okay, taking multiple trades a day, oversizing, trying to make some money back. We can't do this. We can't lose ourselves due to ego, due to any type of emotions that we're feeling. Okay, we got real people to protect and provide for. Okay, we can't fail. Okay, and failure is just not going to be an option, especially when we're going to hop in on the charts trying to succeed. So let's be structured, let's keep ourselves together, and let's keep ourselves composed. So why discipline is going to be your shield. Without discipline, traders risk wiping out their accounts, and discipline protects you by enforcing structure and rationality. Okay, when you know what you're trading, okay, you know, okay, I know why I'm trading this. Okay, this is going to be a good investment because of X, Y, and Z, fundamentally and technically. When you know where you're going to trade, okay, when you know where your entry is, when you know why you're going to enter the trade, it's going to be an important piece of succeeding, okay? Making sure you're not doing absolutely anything on the block is going to be a big part in whether or not you succeed in trading or not. Why am I closing at this place? Why am I entering at this place? What are my parameters, okay? And keep yourself on a strict, structured plan depending on whatever you play. If you're a crypto trader, okay, focus on how you want to trade crypto. If you're a Forex trader, focus on how you want to do that. For stock traders, etc. Okay, be the best at whatever sector that you trade in. Play whatever strategy you like to play, okay, and become the master of it and stick to it. Find your consistency, okay, whether through paper trading on your actual account. Once you find that edge that you like personally, whether it be a break and retest, breakouts, whatever, stick to it. Journal each of your trades and stick to it. Stick to it. Over 90% of normal traders, retail traders, non-hedge funds, or large bodies of money pulled together, included just individuals, lose money due to a lack of discipline. Okay. And discipline prevents catastrophic losses from overtrading or ignoring stops. Okay, it's like real life. For example, when you're putting money away in your savings account, if something hits the fan, you're going to be good because you were disciplined. Okay, you were holding back from certain things that you wanted to buy immediately. You said you were in stack mode, you were staying down, putting bread to the side, and you were growing your wealth. Okay, and you were able to handle situations if something were to happen. And emotional stability, it keeps fear and greed in check, reduces panic selling or FOMO buying. Okay, panic selling can sometimes happen. Let's say you're up in a position. If you don't know where your stop loss is, which is an area where you should exit your trade, then that can be a problem. Okay, if you don't know where you want to close your trade, which is an area where you want to take your money, your take profit, that can also be a problem. Because if you're getting reversed on at a place where you should have already closed, then you might just close at a loss, and then price might break it out, and then you might be emotional, like, oh man, price stayed up in the same place. This is why it's important to have a strategic plan. When you have a strategic plan, you know where you want to buy, you know where you want to exit, etc. That type of stuff just does not happen. And disciplined traders with stop losses exited early, while others held losing positions, losing 50+% of their account in a single trade because getting emotional. Okay, so if price hits your stop loss, you gotta close. You just gotta close. Okay, there's no fighting, no nothing. If price hits your stop loss, that's it. Okay, that's it. We're gonna be on to the next trade. Okay, God is good. Just grateful we had the opportunity to even put down some size in the first place, and we're gonna come back stronger. Okay, just come back stronger. That's it. That's all we can do. Some common ways that traders destroy their accounts. Undisciplined behaviors can lead to account blowups. Let's talk about some dangerous pitfalls. 1, over leveraging. Okay, over leveraging, putting on too much size. Okay, playing with too much money and using excessive leverage or margin can amplify losses. So for example, 100x leverage, and leverage is going to be when the market makers or whoever you're trading on with the broker is going to give you pretty much money to play with as long as you meet a minimum amount of money. Okay, so you can in turn play with like $100 margin, but you're playing with like $10,000 worth of size, for example. Okay, but if you're not careful with that, it can wipe out your account in one move very significantly and quickly. And revenge trading can happen. So that can double down after losses to recover after a decision like that. Sometimes traders can double down, okay, putting on more size than usual. Be like, you know what, I'm trying to make this back and be in the profits. Let me put on the size. Okay, then it just leads to gambling in a downward spiral, all because you got into an emotional situation, you lost your discipline, and you lost your footing. And holding losing trades, hoping for a rebound. And chasing hot trends without research. For example, buying meme coins at peaks during the 2021 bull run. And excessive trades increase feeds and emotional fatigue. Discipline counters these by enforcing rules and limits, keeping yourself structured, and making sure you don't lose yourselves. And building a disciplined mindset. Discipline starts with mental preparation, and you can help cultivate habits to stay focused and rational. And sets you clear goals. You can set realistic targets. For example, 1% monthly returns with like a 5% drawdown. Okay, so don't just have straight profit goals though. I recommend just trading. Okay, it's really just going to help you just grow your structure over time. And routines. You can begin each day with market analysis and trading checklists. And for example, you can review the news and technicals for 30 minutes, see what's going on within the markets, be hip, get updated, and do your thing. And continuously learn. You could read books like Trading in the Zone by Mark Douglas, Stackmode Network for key steps of probability. It's going to be a lot of books you can go ahead and check out to go ahead and get informed too. Okay, and accountability. Accountability is going to be extremely important. Okay, be accountable for whatever you do. Okay, if you make a mistake, own it. Okay, if you like, you know what, I overtraded today. No, the market's a scam. The market didn't do anything. Okay, if you made a mistake, you gotta own up to that. You gotta take it to the chest, and you gotta really let yourself progress from that mistake. Take that loss as a lesson, and then go ahead and progress. Go forward. So risk management, it's gonna be your first line of defense. Risk management is discipline and practice, and it ensures that you never risk more than your account can handle in the first place. Never trade with rent money, grocery money, or any type of bread that you're clenching your butt cheeks if you lose. Okay, just don't do that. Especially if you're a beginning trader, risk only 1 to 2%. As you get better, and it's going to be 1 to 10%. And always set a stop loss if you're a futures or forex trader as well too, due to the fact that you can get margin called, and if you lose money on the margin, you can get sued by the broker. So be careful with that. Options, your stop loss can be the contract, so it's a little different. So diversification. Good spread risk across different assets to avoid single point failures as well too. And a risk to reward ratio. You can aim for 1 to 2 or better. For example, you can risk $100 to gain $200. So that's a 1 to 2. 1 to 4 is you risking $100 to gain $400. Okay, so things like that. So you can also backtest strategies in the worst case scenarios too, like certain crashes, and see how the market developed during there too. See how people bought the dips and see how the market trended afterward. Risk management prevents a single bad trade from wiping your account, even if a crash and stuff like that happens, or bad news and stuff. Okay, so choose what you want to do. And crafting a bulletproof trading plan. Trading plan is going to be a roadmap to disciplined trading. Okay, you can write it down and follow it strictly. Okay, make sure you have your entry and exit rules once again. Okay, define your clear signals. No, you know what? If I'm a retest trader, I'm going to wait till resistance gets broken and turn it to support. And then trading hours. Okay, you can limit trading to high focus periods to avoid fatigue. Okay, or set your alerts. Okay, set your alerts on your phone at your levels that you want to play, and then you can go ahead and get in your trades just like that. And track your performance too. That's going to be important and imperative to succeeding. Track your performance on Discord or journal or whatever. And don't deviate from your trading plan. If you hop into a trade, don't go try to hop in something else immediately. Okay, take your time. Okay, be structured, be disciplined. If you tell yourself, you know what, I'm going to take these type of trades, then take those type of trades. Okay, don't deviate outside of the plan. And there can be some updates in your trading plan too. If you notice you're just losing consistency, okay, be like, you know what am I doing wrong? Okay, but once you catch your edge, once you catch your consistency period, okay, you're good. Stick to that. Do that over and over again until you never trade again. Okay. So if you feel like you're about to crash out, if you feel upset, that can really derail how you feel. Okay, your discipline, and that can definitely derail your P&L. Okay, hop off the charts. Okay, you can go pray, be grateful that you can just make money by clicking buttons and looking at a screen in the first place. Okay, you're good, you're blessed. Okay, you're blessed. Understand that you're even blessed to even have internet and have an opportunity to just make money virtually. Okay, people back in the day used to have to slave, move rocks, all types of stuff. Okay, so just be grateful in the first place and put a timeout. If you got to take a week from trading with actual bread for a week or two, do that. Okay, go paper trade, sharpen your edge, journal, take it serious still, and let's see where you're at. And you can also use trading bots to enforce rules on certain platforms too, okay, like Binance. And you can join trading communities to share certain experiences. Yeah. So journal. Okay. Apps like the Stackmode app, which is going to be coming out soon, or Edgewonk, Notion, Discord, notes on your phone. Okay. In-person journals. You can go ahead and journal every trade, and that builds accountability and reveals patterns to strengthen your discipline. What you want to log is your entry and exit prices, rationale, emotions, and your outcomes. Okay. And do weekly reviews. Check everything out. Identify your undisciplined trades. See what you did wrong. See how you could have learned. Okay. And see if you took any trades outside of your plan. Calculate your win rate. Okay. See how much you win. Okay. If you're noticing that, okay, I have a 90% win rate. It's not meaning increase your size significantly. Okay. Just take your time. Be patient, and just stay locked in. Don't P&L trade and get averted from the plan. Okay. See how much you lose. Okay. If you're losing extremely often, see what you're doing wrong. See if you need to change your edge and stuff like that. If you notice you're too much on the smaller time frames, then go to the higher time frames and play your edge there. All candlesticks formations still work the same. Just depends on what time frame you're on. Okay. And learn from your mistakes too. Don't crash out. Okay. Every time you take a L, really take it as a lesson. Okay. So for instance, if you did overtrade, for example, don't come on the next day thinking, okay, I need to make up from yesterday's loss and make some more bread. It's a completely new day. It's a completely new day. Just run it up again, start over. And the whole reason you're in that situation is because you weren't disciplined in the first place. So fix your discipline, get restructured, come back stronger. So disciplined traders with stop losses preserve capital, while others lost 70% holding through the dip. Okay, so stop losses, especially for futures and forex, can just prevent you from getting margin called, owing the broker money, or going through any hard financial situation, sending you back further from running it up. Okay, so set your stop loss, play wisely, be aware of margins, and be careful for news too. If you're a futures or forex trader, when news comes out, your margin can go ahead and increase, so be aware of that too. And don't chase and copy trade other people too without understanding. Okay, if they're dropping informed notes and stuff like that in the signal channel, that's fine. Okay, like when I give my signals, I always try to make sure I give you guys timestamps, reasons why, because I don't want you guys to be trading the signals forever. Okay, I want you to eventually get off of that. But disciplined traders like to just copy trade people without any correlation or understanding, and you can really lose some bread like that. Just because someone put bread into a position doesn't mean that they're going to be a solid or disciplined trader, okay, causing you to lose big. And that's definitely not what you want. So discipline prevents emotional decisions that destroy your account quicker than it definitely needs to be. So instead of you growing money positively, having a positive APY, annual percentage yields per year, you're destroying your account, destroying your future. Okay, and it's not worth it. It's not worth it at all. Okay, don't put yourself in debt. Don't set yourself back. Don't destroy the bread that you're working hard for due to emotional decisions. It's not worth it. So when market is stressful too, you have the ability to also not play. Okay, you don't have to trade every single day, especially my day traders. Some of you guys think that you have to trade every single day. Not true. You don't have to do that. Okay. If market's too much, if it's not setting up how you want it to, you can hop off. Take a break. Set your alerts at levels that you think are confident in. See if there's closes at those levels and go ahead and play them. Okay, volatile markets really test your discipline the most. Okay, stick to your plan. If it's not how you want, you don't have to trade just because there's volatility and price action going on. If it's not the setup that you want, you don't have to play it. Okay, reduce your risk too. Okay, if you feel like market's too volatile, it's too much going on, you don't trust it, play with less size than you normally would have. Okay, this way you're not going to be shaking in your boots whenever size is down. And monitor the news. Stay informed, won't react impulsively. And take a step back. Take breaks during extreme volatility to reset. And there's some exercises to build discipline. Okay. Number one, write a trading plan, okay? Do that, figure out what you want to do. Paper trade if you need, journal, and go ahead and see if you can find a mentor, okay? If you need a mentor, head over to Stackmode.net, okay? See if you guys just want to talk to one of your friends who might invest, stuff like that, okay? Someone around you could talk to about trading. So let me know what discipline struggles that you face with, and we can go ahead and talk and fix all these issues.